Welcome to Pro Webcast News, where we bring you daily industry updates. Today is Tuesday, March 9th, and you're watching the Afternoon Update with Paul Wilson. Today's news is sponsored by Covenant Reliance Producers. We build success stories. For more information, please visit crproducers.com. Now for today's headlines. The number of U.S. households with a net worth of at least $1 million spiked by 16% last year following a decline during the economic crisis, according to industry consulting group Spectrum Group. A total of 7.8 million households had a net worth of $1 million or more in 2009, excluding their primary residence. This was up from 6.7 million in 2008, when the number of millionaire households shrank by 27%. Despite the jump, the current number is well below the record of 9.2 million households reported in 2007. In addition, the study found that households with at least $5 million, known as ultra-high net worth families, rose 17% last year to 980,000, while households with $500,000 or more reached 12.7 million, up 12%. In investment news, a recent ranking of the world's largest hedge fund managers gives a hint into just how strongly the sector was affected by economic events during the past 2 years. According to Pensions and Investments' list of the world's largest hedge fund companies, each of which had at least $20 billion as of December 31st, assets managed by the 11 companies totaled $316.2 billion, nearly the same total managed by the 10 hedge fund managers that made the previous ranking at the end of 2007. The previous 2 years have drastically shaken up the list, with hedge fund assets of Goldman Sachs Asset Management, Renaissance Technologies Corp., and Citadel Investments Group all dropping below the $20 billion cutoff. Meanwhile, the list was joined by 4 new companies: Brevin Howard Asset Management LLP, Baupost Group LLC, Soros Fund Management LLC, and Man Group plc. J.P. Morgan remained atop the latest list, having managed $53.5 billion in hedge funds as of December 31st, an increase of nearly 19% from the firm's 2007 total of $45 billion. In insurance news, insurers should blame themselves for market swings, according to Michael LaRocco, president and CEO of Allianz of America's Fireman's Fund Insurance Company. Speaking at a CEO panel discussion at the Independent Insurance Agents and Brokers of America's annual legislative conference and convention, LaRocco said that insurers need to be honest and admit this, calling it quote-unquote bad behavior, and adding that insurers should price their products to earn an underwriting profit. Discussing regulatory reform, he said that the real regulatory question facing insurers is not state versus federal regulation, but rather finding a common-sense approach to regulation. Finally, LaRocco said he is cautiously optimistic that the federal government's current terrorism risk insurance backstop will remain intact, but noted that due to concerns over the deficit, anything is possible. I'm Paul Wilson, and thanks for watching Pro Webcast News. For more in-depth news and features, visit producersweb.com.